The Dutch tulip bubble, also known as tulip mania, occurred in the 17th century in the Netherlands, and is considered one of the most famous speculative bubbles in history. Here's an overview of its cause, consequences, and social impact. Cause. The cause of the Dutch tulip bubble can be attributed to a combination of factors. Tulips were introduced to the Netherlands in the late 16th century, and quickly gained popularity. As the demand for tulip bulbs increased, their prices began to rise. In addition, the introduction of new tulip varieties, with unique colors and patterns, created a sense of novelty and rarity, further driving up prices. Speculators entered the market, hoping to profit from the escalating tulip bulb prices. Consequences. The tulip bubble eventually reached its peak in early 1637, when prices became exorbitantly high. However, the market suddenly collapsed, leading to a sharp decline in tulip bulb prices. Many speculators, who had bought tulip bulbs at inflated prices, were unable to sell them and suffered significant financial losses. The bursting of the bubble resulted in widespread economic turmoil and financial ruin for numerous individuals and businesses involved in the tulip trade. Social impact. The social impact of the tulip bubble was significant. Many people from various social classes had invested their savings and assets into tulip bulbs, hoping to make a fortune. The bursting of the bubble caused a loss of wealth for these individuals, leading to a general sense of disillusionment and financial hardship. The Dutch government had to intervene to mitigate the economic fallout and prevent further damage. Furthermore, the tulip bubble had broader social implications. It highlighted the speculative nature of markets and the potential consequences of irrational exuberance and unfettered speculation. The event serves as a cautionary tale about the dangers of speculative bubbles, and has since been studied by economists and historians. To understand the dynamics of market behavior and investor psychology, it's worth noting that the Dutch tulip bubble did not have long-lasting negative effects on the Dutch economy or society as a whole. The Netherlands went on to become a prosperous nation, and the tulip trade continued, albeit with more regulated and stable pricing mechanisms. Overall, the Dutch tulip bubble was a significant event in economic history, characterized by a speculative frenzy around tulip bulbs, followed by a sudden collapse in prices, causing financial losses and economic upheaval. It serves as a reminder of the potential risks associated with speculative markets, and the importance of prudent investment practices.